On the radio coming into the studio today, I heard Rob Byrne talking about potholes and the size of potholes in one particular area of the country, which unfortunately I don't remember, that he says just don't even try and drive along that road. It is one of the issues of the infrastructure, not well maintained in the past, needs to be sorted out. And if you want to have a bet on a company that's going to be focused in that area, well, you can go for Raubex. It's a highly rated stock listed on the JSE in March last year and come out with the first set of results as a listed company. They did, of course, produce results last year because these are to the end of February. But this is 1 year in the operation and some enormous increases. The commercial and financial director of the Raubex Group, Francios, Diedrechsen, is with us in the studio. You've done a lot of acquisitions, Francios. If you were to strip out the acquisitions and go back to the Raubex that actually listed, what kind of profit growth was experienced?
The Raubex that listed, the audit numbers you have in front of you, the February 07 to February 08 numbers, actually don't include any of the recent acquisitions. We were subject to competition approvals, which the majority of them came through on and just after year end. So we've, in addition to the audit numbers, put out what we call pro forma numbers to actually show what that would be. The earnings per share, or headline earnings per share of 180 odd cents per share, does not actually include that. So that's purely organic.
Wow. So those huge increases, more than 100% in the profits, come from the business.
Yes.
The underlying business. And the business of roads is obviously a very good one at the moment.
Yes, as you rightly alluded to in the beginning of the program, the potholes. We've had a very wet summer. These numbers have been produced, notwithstanding that in some of our sites we lost in excess of 40% of our production.
When you're busy fixing up the roads, maintaining them, and the rains come?
Well, we actually don't work, to be fairly honest. We physically can't work. The asphalt doesn't dry. So you end up being quite unproductive if there's too much rain. We do plan for certain amounts of rainfall during the summer months. Sort of a normal month we would plan to lose 4 working days per month. But we had a couple of months where it was really wet, and specifically as an example in Mpumalanga, on 2 of our sites we lost in excess of 50% of our production days. So these numbers we were very proud of, notwithstanding those conditions.
What happens in a rainy place like Ireland or England, where they also have to fix their roads?
I must admit I'm not actually certain. I presume it's priced into the way they go about it, and their planning must work around it.
They use the same materials. So.
Yes, they also, Europe does tend to be a little bit more concrete focused on their roads, where we a lot more, we also do concrete roads, but a lot more asphalt focused. So there's a slight difference in the product. Concrete or cement roads are a lot more expensive. South Africa, we're accustomed to asphalt roads. They work in our conditions. The rain affects the productivity, the flip side of it, the potholes you referred to, etc. Adverse rain conditions tends to enhance the need to maintain roads, and that suits us on the other side of the coin.
South Africa has allowed its roads to deteriorate probably beyond where they should have been. What was the reason for this?
Our best guess is, probably something similar to the Eskom stories of the past, where there was a lot of talk about doing work and getting the infrastructure sorted out, but there was a very big drag on actually getting on with it. We're proud to say that those days seem to be over, and that they're getting on with it. Skill shortage is the big problem we face in terms of actually catching up that backlog, because it's tremendous. There is a gigantic need to repair some of the infrastructure, specifically roads that we know something about.
If there was no limit to the amount of work that you could do, in other words, if you had as many skills and as much equipment as you required, how much more work could you do because of the demand that there is to sort these roads out?
I'd venture to say, any business, you can only grow to certain points and manage that growth, between gas flows and everything else that comes with growth. But I would say for us to be able to manage to grow the business 100% a year would be very doable if there was an endless pot of people. And yes, we've delivered those type of numbers, but clearly going forward it'll be slightly more subdued. We've bought a lot of capacity where we could. We run our training centers and do whatever we can. But if the problem didn't exist, I guess we would be able to cream it quite a lot more in the shorter term. From Raubex's perspective, we grow as aggressively as we can.
So what's holding you back then is skills and the ability to actually get into the road?
It's skills. It is predominantly skills. Problem you can fix with money is not really a problem. So the machinery we can buy, The unskilled side of our labour force is also not the end of the world, because we have a lot of unemployment in South Africa, so we can get those people into the system quite quickly. It's actually the middle management, as we call it, the artisans, the foremen and the likes. These are people that need to get on site. They need some training and they need to get on site. And it's somewhere between a 1 and 3 year cycle in terms of that training process. And clearly you lose some people along the way as well. So that tends to be our big constraint in terms of how aggressively we can grow.
We've seen the engineering sector import skills from Saudi Arabia, well, the Middle East, the UK as well. A lot of ex-South Africans who are being enticed to come back. Have you had much success with that?
Less so than some of the majors, but also we explore that avenue. But in our game, that seems to be the sort of more senior guys, the engineering people and the likes. We've got top engineers working in our company. I've got the world respect for all of them. We can import those that we don't have. The conditions in terms of the work we do are not really the glamorous stuff. Some of the roads we're working on are really in the sticks and not fit for everybody. That's probably part of our niche in which we operate, and that's where that middle tier, as I alluded to earlier, that's where it gets quite tricky.
So it's not easy to bring people through that quickly, and by the same token, it's difficult to find
people that are willing to work in those conditions.
The acquisitions that you have made, are they all value enhancing? In other words, next year, stripping out the underlying growth, are you going to see a rise in earnings per share?
Yes, just on the February 8 numbers that we've released this morning, the audit numbers, as I said, came in at 180.5 cents a share, earnings per share. Had those acquisitions been accounted for in the year that had gone by, that EPS would have been R2.05 a share. So it has quite an earnings enhancement to us. And at the same time, the capacity increases that it's given to us, we believe we can sweat those assets and do more with them in the year lying ahead.
Your profit margins are now, your gross margin is now over 20%. What a wonderful business to be in. Can it go any further?
No, we actually planning to have our margins will stabilize at these levels. They've ticked up quite nicely to here. But there needs to be a balance between yourself and your clients, and where they're happy to pay and where you're happy to receive. We believe we're there now. So we actually are planning to run at the 20% group margin going forward, including the acquisitions when they're coming in.
You've been very aggressive with your listing since just over a year ago, raising a lot of money. What was a little concerning, though, you raised 380 million, good stuff, but it cost you 26 million rand to do so. Is this the merchant bankers wanting to found
unfortunately, our timing with regards to the private placement could have been better. The 380 million rand you touched on is actually net of their costs. It was 405 million rand that we did raise. But when we embarked on that private placement, it was exactly when the financial markets seemed like they were coming to an end, in the middle of the Bear Stearns crises and the like that were happening all over the world. So the conditions were pretty difficult, and we needed to do what we had to do. And the debt markets became quite painful during that process. So we didn't actually opt to take the capital route up front. It became what we needed to do. And
so you had to pay up for that service.
So we needed to pay up, yeah.
And it is 26 million. That's pretty kind of 8 or 9%. Roads, though, is your real business, not raising capital, and it does appear as though it's a good place to be, not just now, but maybe many years into the future. Now, I really want to ask, just to close off with, the response from Marion Roberts' Brian Bruce to a question of ours recently was that he thinks the infrastructure boom in South Africa could continue into the 20s. In other words, another 15 years hence. In your area, in the roads area, would you go along with that?
Yes, we probably have a slightly shorter view than Brian would have. I mean, they work on massive mega projects which we don't have the privilege of doing. But in terms of, just as a case in point, the Gauteng Road Upgrade Program and so on, these programs are running till at least 2015. So we're quite comfortable until then at least.
How big is that program in Gauteng?
It's quite large. I mean, it's 11.5 billion rand worth of tenders that have been awarded now in the last couple of weeks, and the work's commencing now in July. That's only the first phase of it. The R21 still comes on top of that. And then the second phase, which only commences in 2011, which includes the building of some new freeways. So, until 2015, there's a fair amount of work to be done.
And I guess until Transnet gets its rightful share of traffic in South Africa, the roads are going to continue to be under pressure.
I would believe so, yes.
Well, it's a fascinating story. Francios Diedrechsen is the Commercial and Financial Director of the Raubex Group. It's in a very sweet spot in the economy, many years of growth continuing in this area. Demanding rating on a P of around 34, that means an earnings yield of around about 4%. You can get risk-free earnings at 9% from bonds nowadays. And of course, bonds don't grow that much in capital value, and certainly not at 100% a year. So do your calculations. Maybe wait for this share to come back a little bit, and you'll have yourself a good long-term investment. That's all from Power Lunch, which is brought to you in association with MoneyWeb. We're crossing now to the US for US Corp Box, CNBC Africa. We'll be back at 4 o'clock Central African time with regional updates.